Also this week, the IMF is warning that storm clouds are gathering for the global economy. One of the IMF's top officials has warned on Tuesday that storm clouds are gathering. The government and central banks might not be well equipped to cope. Now, we get these sort of warnings periodically. The fund has been trying to urge governments to fix the roof during the sunny last 2 years for the world economy. The IMF First Deputy Managing Director David Lipton said... but like many of you, I see storm clouds building. Apparently, they will be stopping doing quantitative easing. That sounds, like might not be the best time to do that, since we're going into the whole Brexit business next spring. Mm-hmm. That will actually, surely, if they stop doing QE, will that actually make the economy more fragile?
Are we talking about Britain or the global economy?
The Eurozone.
Well, the Eurozone, yeah. I mean, what's happening is we're now reaching the point where the Federal Reserve have started to rein back on QE and raise interest rates, and it's only a matter of time before, the elastic snaps. And there's the same thing's happening in the Eurozone, and at some point the elastic's going to snap. It may snap in Britain first because of our particular obsession with Brexit, but it won't make that much difference.
Why might QE make that more or less likely to happen?
Well, the markets have become addicted to free money provided by the government, which they then take away and invest in speculative bubbles. And they've made a packet out of all of this, and of course, as long as they get out in time, they'll be fine, because you can short your way out of it as long as you guess at the right moment when you're going to pull the plug. And of course, what will then happen is that the big too big to fail banks will then hopefully be bailed out by the government again, and that's what they're hoping. And then they can buy everything up for pennies on the dollar when it all crashes. But it's the social impact of this is going to be absolutely horrendous. And it's been coming. We've had 10 years to try and sort this out, and not only has nothing been done, in actual fact, the problems that led to the financial crisis in 2008 have been intensified by the policies that have been pursued. That's because the people involved have got too much power. They had too much power before, and they've actually consolidated that power. And that's who really runs things.
The European Central Bank's problem, apparently, is that the growth is weaker than expected. And the outlook is clouded by a threat of global trade war, the prospect of a hard Brexit and Italy's budget standoff with the European Commission. But quantitative easing has run its course, and any extension would have hit the European Central Bank's credibility after it flagged the scheme's end this just a couple of months ago. In the end, the ECB tweaked the wording of its statement to reflect the increased economic concerns, but kept its reference to balanced risks. So QE, that's it. We've had enough of that. No more. For the euro.
Well, what may happen is that after the crash, they'll try and reinstate it, but it would be too late because you've already lost. You'll have lost so much GNP by that stage that it won't work, and ultimately we're going to have to go to the kind of.
Why can't we just do QE for the people? In other words, QE money rather than going into the stock market, stock exchanges, going to the government, so that the government's got money to do things, invest in projects, and actually get jobs going, that kind of thing, a bit like the New Deal from Roosevelt before World War II.
Yeah, well, I mean, Varoufakis has been putting forward a Green New Deal for Europe programme this week, and of course that is the way to go. The problem is that the governments have become, basically all of their resources have been spent propping up the banking system, so they've got no resources to give to the people because they've all gone somewhere else.
Draghi has said he's stuck, basically saying that the QE is the only thing which has been driving growth at all over the last few years. So really, it's a kind of fictional growth they've been having.
Well, indeed. The whole thing is an illusion based on pretending. It's what Varoufakis calls extend and pretend. And at a certain point, we are going to hit the buffers.
Okay,
and when we do, it's not going to be funny.
What with the end of QE and Brexit possibly precipitating this, it was nice that I bumped into a chap called Jon Coward earlier this week, who's a former Lloyds banker, and he had quite a lot to say about the current malaise with banking and also what we should do about it.
My name is Jon Coward. I'm part owner of a company, or little business called Licorice Heaven. I worked in fruit for the bank with the black horse. And when I started banking many, many years ago, you worked your way up from the shop floor to top dog. you knew the intricacies. And one of my old bosses said, we're the only company that sometimes got to ask for its stock back because we lend money and we need to get it back. And what I think happened just before the boom time is that they were bringing in people perhaps who didn't have a banking upbringing. So a big bang came in, and a lot of people thought there's a lot of money to be made. Now, we're not talking about the merchant banks, we're talking more, the mortgage market, etc. And the people who at the top were the people were coming in from other industries, and they didn't grasp the nettle that selling banking products is different than selling, dare I say it, holidays or whatever. Because at the end of the day, you've got to lend to someone who can pay you back, and all they wanted to do, and again this is very controversial, is they were lending on either an asset like a house, not really realising that the value of the house could go down because they think they could always sell the house. And of course, that in America with the two big companies over there, what they used to call them Fannie Mae, wasn't it?
Oh, yes. Okay.
This is going back quite a few times, and then people then suddenly said, well, this we're lending to people who can't repay, but the asset that we were going to sell to get our money back isn't there. And of course then the market crashed, and banks have been lending to other banks on the strength of their asset book on these properties, and then suddenly everyone thought, well, this company is lent to people it shouldn't do with assets which aren't that strong, and that was what clogged it up. And the banking was based on trust, and it just went spiraling down. I can remember back in the old days is that we would always, when I was lending money, my first thing is, can this person pay, and will he pay? Not, I'm going to get, on the asset. I was lending to the person if he could pay back. And a lot of my customers, when I said, well, look, unfortunately, you can't buy this 5-bedroom detached house. You're going to have to sell for a 4-bedroom. They wanted the 5-bedroom. They borrowed too much through another company, one of these secondary lenders. And of course, it all went pear-shaped.
There's definitely big changes gone on in banking, and one wishes almost that we could get some of the old bankers back. Yeah,
I mean, the best bosses I had were guys and women who started on what I'd call the shop floor, on the cashiers, etc. And they knew, and they had to get banking exams. So I had to get 10 3-hour banking exams, so I had 10 exams, each of 3 hours, to be, so say, competent in lending. Well, that's all gone out the window.
Now, Gordon Brown said back in 2008, I think it was a slip, I'm not sure if he meant to say it, but he said, I saved the world. Actually, what's happened is we've now got an even bigger bubble. We've got money printing going on. We've got massively overvalued share prices and overvalued property prices, and yet banks are still lending. It does make it sound as if history could repeat itself. I wonder what you think.
Well, one doesn't know what's in the future. I mean, all I would say is if you actually look on what's called salary multiples, how much people are lent, I think the actual salary multiples compared to what people were earning is about the same as they were in the 70s, which is when people are earning sort of £1,800 a year. If you multiply that up, that will be the size of the mortgage. So I don't know what the average wage is now, but if we were lending 4 times somebody's salary, that's what they were doing in the 70s. It's just with inflation, we're talking on bigger numbers.
Also, there's this whole thing called casino banking, which is the merchant banks. They're supposed to be separate to the high street banks, but are they?
Yeah. Well, merchant banking is that's the ones that have got a bad reputation because all this hedge funds and all that. They can manipulate the markets. We don't want to go too far there. And the big merchant banks, that is where they make big money by. They can manipulate the markets.
Okay, so I'm going to ask you the final question. Mark Carney has decided to quit. They've given you the job, someone who's an old hand. What is there anything that you would say you were sitting in the Governor of the Bank of England's position and saying, okay, John, what do we do?
Well, first of all, I've made sure that we firm up the Financial Services Act. So people have got to be registered, fully registered, inspected regularly. It is coming. So that you get rid of these cowboy lenders. I would definitely agree with splitting merchant banks with ordinary retail banks. That is the thing. And I would put the directors legally responsible. I know on paper they are, but anybody caught doing something wrong, personally, they go to jail. That's the first things I would do.
And how do you rate the governors, Mark Carney and Mervyn King?
I was great. I like Mervyn King, Lord King. I think he was very good. Mark Carney, he's done a few. If they've got a difficult job, let's not make any bones of it. But I think he overacted when we voted to come out of the EU by reducing interest rates, and I think he has admitted that it was a wrong thing. He sent out the wrong signals. I'm not an expert, but I do think he tends to overreact, and the problem with what he says can affect the markets, and you've got to be very careful what you say. Because,
well, surely in that case, the Bank of England governor shouldn't say anything.
Well, that is a good question. There's something to be said for there. But then he's got his actions, hasn't he? That sends signals to the markets, and the markets. A lot of these are very volatile because there are speculators involved to make a quick few pounds.
Yeah, or a few million. Bit naughty, isn't it? Manipulating the markets. That was Jon Coward at Licorice Heaven, former Lloyds banker. Time to sign off now for the Murdoch News at 8. Coming up live on Facebook, it's Arabian Nights with Mohammed Makawi. We hope you'll find this show's podcast, story links and comment page and our contact details at thisweek.org.uk. I'm on Twitter at Tony Gosling. He's wishing you a relaxing and enjoyable BCFM weekend. Do please join us for the Politics Show at 6 o'clock next week. God bless, and don't let the banksters get you down.
News on the hour, live from the Sky News Centre.